You were listening to ChartingWealth.com for Wednesday, the 5th of July, 2017. Markets closed, of course, on Tuesday for the 4th of July holiday, shortened trading day on Monday, the 3rd of July. Let's talk about what happened on Monday as we get ready to roll into Wednesday. We see that on the S&P 500, up just a little bit, 0.17% for the day. The Qs, that is the NASDAQ 100, down 1.05%. Of course, that is not surprising. We're in a weekly downtrend on that, and it's clear that the market is rolling over as far as the NASDAQ 100 goes. What's going on with TLT, the 20-year bonds? We told you get out of that, about a week and a half ago. And of course, we had that beautiful run-up, made all that virtual profit running up. And then, of course, it broke over and started going down, and we said, get out. And, of course, it worked. What's going on gold? We had that weekly vertical crossover. Those of you who are signed up for our service, if you are not, you can get an explanation as to how to sign up for that for free when you subscribe to our daily market review. How do you do that? You go to chartingwealth.com, put in your first name, email address, and for free, a number of wonderful things will show up. You will get our How to Read a Stock Chart video. You'll get the daily market worksheet, the weekly market worksheet, the trade sheet, and the layout that we use at freestockcharts.com. You'll also get instructions on how to, again, for free to sign up for our notice. That is our text notification of when weekly vertical crossovers occur, like happened this last Friday, the 30th of June, the last trading day of June. We had a weekly vertical crossover going down, and of course that portended the big down move in the market on Monday. Now let's keep pushing through. We'll go through a little bit more of an analysis on all four of these charts. Let's jump into the S&P 500 first. The market has been trying for many weeks. Let's see, 1, 2, 3, 4, going on the 5th week to top out. We had a weekly vertical crossover going down, not a strong one, but we had one back on the 23rd of June. That is the week ending the 23rd. Remember, all weekly candles always end on the last day or the last time that they reflect. A weekly candle, of course, ends at the end of the week. So when we call weekly candles, we always talk about them as per that Friday. So the weekly candle for the week ending the 23rd of June was a down, well, it was a crossover going down as far as the PPO goes when that candle ended. That's how we call that time period. We have seen a slide off and a down movement in the price percent oscillator. We're finally seeing, and it's taken going on 3 weeks now, the derivative oscillator move over going down. It spooked us when we had such a large green box for the derivative oscillator, even though the PPO, the price percent oscillator, had crossed over. Did not make us feel comfortable, and of course that portended this sideways slide that we've had. And again, up just a little bit for the day. We'll continue to watch now. Check out what's going on the 2-day chart. It's still crossed over going down. Our price movement's still below that. As we look at our 4-hour chart, we are waiting for this 4-hour chart to cross over going up. It's what we call a pullback. We need a pullback to occur first before we can jump into the down move. Why is that? We require that. We want the market to digest the initial movements that we're seeing and pull back on the 4-hour chart so that we can then find a jumping in point when it rotates back over going in the same direction as our 2 large charts. Want to know more about what we're talking about? Again, subscribe at chartingwealth.com. You will get a link to our How to Read a Stock Chart video. We explain this a little further so you understand how we use the weekly, the 2-day, and the 4-hour chart. Makes a lot of sense, works exceedingly well when it occurs. Doesn't always occur. If we don't have a pullback here, we're not going to pull the trigger on when you actually jump into this down trade, okay? That again is our traditional way of doing it. We do add some caveats in when we have nice, clean weekly vertical crossovers. We can look at jumping in at 10:30 the following Monday. We didn't have a clean weekly vertical crossover going down on this one. That's why we keep waiting for that pullback, because we haven't had the concerted down movement we would like to see, that you typically see, but that's when a chart is set up right. Okay, that's what we're looking for then. Back to the weekly chart, we're going to the Qs. That's the NASDAQ 100, the technology stocks. Here's something interesting, and again, we encourage you, if you don't already subscribe to, don't already have, in your little hands, the Stock Traders Almanac 2017 put out by Jeff and Yale Hirsch. You are missing out on probably the most valuable material that I go to. It is truly my almanac. Heck, it's called the Almanac. That's exactly what it is. Wonderful piece of material. I don't know, it cost you about 50 bucks, something like that. You can probably find a discount at Amazon. But it is a wonderful piece of gear. It's about halfway over, still worth whatever you end up paying for it. You will see that as we slide in toward the end of the week, we start going into the worst months for the NASDAQ. Oh, does that surprise you when you look at this chart? It shouldn't, because of course we had our weekly vertical crossover going down on the NASDAQ back on the 16th. Now the market tried to hold itself up over the 2 following weeks, but finally looks like it has in earnest decided to roll over. The nice thing about the NASDAQ is when it crossed over going down, it was a clean crossover with the PPO, the price percent oscillator, and the derivative oscillator both going negative at the same time. That's what we like to see. Then when we look at the 2-day chart, of course, the 2-day chart always precedes the weekly vertical crossover. It's continued to move down. We had 6 days of up movement right after the weekly vertical crossover going down. Then the next 3 candles are down candles, and of course the price movement throughout the course of the day on that shortened first day of the trading week of the new month of July was down well below the 2-day trend line. If we look at our 4-hour chart, of course, we had a 2-day crossover, a 4-hour crossover occur, vertical crossover occur back at 4 p.m. on the 27th. And of course, that has just been beautiful as things have continued to slide down. Your jumping in point, if you'd gotten in there somewhere around 138, 140, of course, down to 136.50, actually the low 136.10 throughout the course of the day on that shortened trading day on Monday. Quite beautiful, is it not? Again, that's the way our method works. When it works, and again, I say things have to be set up right. The beautiful thing about not being a Wall Street trader, somebody who professionally trades, not that we don't want you to be professional in what you do, but a true professional trader, they have to trade. You don't. You wait for the perfect setup. You don't want to lose money. Rule number 1. Rule number 2, make money. Okay, let's keep pushing through these charts. TLT, what do we see going on there? Of course, we still have a weekly vertical crossover going up. We have a 2-day crossover going down, which means we're not in a trade, right? We got out of this trade, oh gosh, what, last week, week before? Once we saw things top out right around the 26th, that was the beginning of the past week, that was our signal. We need to get out, take the profit that we made, which was a nice profit, and run. And again, when we talk about profits, we're talking about virtual trades. We're not a stock calling service. We're an education firm. We want you to train with us so that you can learn how this works. I had somebody sent me an email today asking me what kind of resources I recommended, what books or college courses or online training might be available. And I was like, well, you need to listen to us every day. That's exactly what we do. You've come to the right place. We can help you. We're your resource. So I hope that person is tuning in and took our advice to fill out your daily market worksheet, your weekly market worksheet once a week. Do practice trades often as you can, because folks, the only way this is going to work for you is if you do all 3 of those things. Fill out your daily market worksheet every day. 10 minutes is all it takes to listen to us and do that. Do your weekly market worksheet once a week and practice trade as often as there is a trade. And keep those notes. You do that, you will master this, okay? But that's the only way. It's not going to come to you by symbiosis. You're not going to get it by simply sitting here and listening to me. You're going to have to practice. Okay, Lastly, we'll go through what's going on with gold. Who loves gold? Well, gold is going down. We had that weekly vertical crossover that we told you about. We sent those text messages out on Friday when the candle closed, and it was confirmed. That was Friday. We gave that notice out the 30th of June, and of course the weekly headed down. Let's take a look at the two-day. Two-day chart, of course, has been headed down since it crossed over, going down back on the 16th of June. What is our 4-hour chart doing? Kinked over, rocked over, going down there on the afternoon of Friday. Continued slamming down on Monday also. So again, we are continuing to watch this go down. Your jumping in point with that weekly vertical crossover going down is, of course, typically at 10:30. Which would have been somewhere around, I guess the opening was 117.35, and of course it was down well over $1 by the time the market closed at 1. Is that not sweet? That's the way it's supposed to work. Folks, that's where we are as we end that shortened trading day on Monday, the 3rd of July. Hope that you have a fantastic 4th of July holiday, and of course the markets open back up on Wednesday the 5th. Be ready, be prepared, practice, fill out those daily market worksheets. Let us hear from you. That new Bitcoin training is going to be out, the new cool chart that we have with the strength index. You're going to really get a kick out of that. We're going to do that training soon. But in order to get any of that, just like our quarterly training, you have to be signed up for and receiving our daily market review. And you do that at chartingwealth.com, the website. Put in your first name and your email address. We do not spam that list. We do not sell that list. That is just ours. In fact, when you sign up, you won't even get it automatically until you confirm that you put your email address in. We are very particular. God bless. Take care, my friends. Have a great holiday. All the best from the team here at chartingwealth.com.